Now, East Africa's largest bourse will introduce day trading from the 22nd of November with a view to raising trading volumes which have been in decline since 2014. Some 8.1 billion shares were traded in that year, but that fell by over 40% to just over 4.8 billion shares traded in 2019 before the pandemic hit. Now, the volume of shares traded did rebound in 2020 by around 9%. That said, let's move a little forward. Comparing the first 8 months of 2021 to 2020, the volume of shares traded fell by 27%. The value of the shares traded also declined by nearly 40% over the same period. The market cap of shares at the NSE, however, by end September stood at 2.7 trillion Kenyan shillings. That's roughly $25 billion at current exchange rates. A little earlier, I spoke to David Wainaina. He's the Chief Operating Officer at the NSE. We explored these trading trends and what's driving them. But first, we looked at how day trading was essentially a stepping stone on the path to high-frequency trading in East Africa.
We started this journey about 2 years ago when we came to you and said that we have upgraded our systems. And ideally, what happened is that we separated the trading and the settlement functions. One of the main objectives of that separation was for us to be able to churn trades at the trading level, and that's what we are calling day trading. So basically, day trading will entail someone coming to the market in the morning and be able to trade on those securities within the same day. So you can be able to churn, and if you profit on it, then that is booked to your account directly. To your second question around who benefits, this benefit is directly to the investors, and all the investors who have CSD accounts at the exchange do qualify for this very significant milestone.
So if essentially you're foreign traders, say for example you're in Uganda or Rwanda, you have to have a CDSE account in order to be able to day trade at the NSE?
Yeah, sure. And that's law. Today you will need to have a CDSE account so that you're able to buy listed securities at the exchange. That is not changing because that is a critical layer of trading just to ensure that whatever you buy has a home, and that is a CDSE account, and the money that you're going to commit to buy has a home, and that is the same CDSE account. So it's a prerequisite to being able to participate in the trading as it currently happens.
Okay, so let's look at this in a bigger sense, because I understand there's a 5% discount on offer to entice day traders to come in and take part, to essentially drive up trading volumes. Looking at the last data set that we got out of the NSE and KNBS, at least covering the first 8 months of the year, we're looking at average monthly transaction flows of around 22,600 transactions a month. So how big a jump in transactions are you expecting once day trading kicks in?
Very good question. Now, the expectation, remember, this has been done in other markets, Ramah. So our expectation is that if we follow what has been done in other markets, we have seen markets that have deployed what you have done, seeing in excess of 100, 200 folds. So we expect anything not short of 50% of our volumes once this takes traction effective November.
The volume of shares traded at the bourse and their value as well, that's in the first 8 months of this year. That's down by about 27% and nearly 40% respectively in the first 8 months of 2021 compared to the same period last year. Last year was chaotic. We had a pandemic. We were changing how we do business. What explains the dip in activity this year?
Yeah, sure. You have made the point, Ramah, that last year was a very difficult year. Remember, markets are driven by information, and 30% of our market is from the banking sector. We have your typical 60% being accounted by Safaricom. So what happened this year is that when the banking industry was reporting their financial results, you've seen some improvement, and that has come to really have some price appreciation across the banking stock, and that explains that we may be lower, but if we compare from where we have come from, especially in January, I think we have made some significant gain. I know in January the benchmark index was about 1800. We are now around 1900, so there are around 100 points that have been made. In terms of volume of shares that have been traded, actually from a turnover perspective, we could be doing better because the prices have recovered. So even if the volumes are a bit lower, we are by and large around where we were last year, but in terms of the value that we have created for investors in terms of value, it's a plus.